Is this the type of company that you are interested in investing in? Elevance Health has clearly had a bit of a tumble in the last couple of months. What's going on here, and why might this make a very interesting opportunity for a dividend investor here for the long term? So, look, welcome back. My name is Lincoln Wood. I am a professor in a New Zealand business school, and I spend a lot of my spare time looking at dividend investing and creating a long term durable income investing in the stock market. A lot of what I do revolves around also what I teach. So, in many cases, I will look for and examine companies with strong economic moats or competitive advantages, and from these look for long-term stock holdings. Now, Elevance is one that has definitely been on my radar for a long time, and anyone who knows my investing style will know that I like these companies here, where this orange line is representing an increase in the adjusted or operating earnings over time. Up until recently, it was forecasted here in the dotted lines to sort of continue the same trend upwards at a nice increasing pace. But we can see that the earnings have gone very much sideways, really, or even a minor decrease here, with an estimated earnings of only $33 per share for the end of the 2024 financial year. Now, my big question is, what is going on here, and does this represent an opportunity or a threat? Now, obviously, people who were invested at this point have seen quite a precipitous decline in the value of their holding over this period. If we switch over to the forecasting tab here on Fast Graphs, we can see a couple of really important things. We can see that over the last 6 months, the the estimates on the prior 6 months ago for 2023, they were sort of holding pretty steady, pretty consistent. But what we see heading out to 2024, 2025, and 2026 is quite a big decline that was occurring sort of 3 to 6 months ago in terms of the analyst estimates of what the earnings would be in each of those years. Now, is this a bad thing? Is this a good thing? Is it avoidable? I'm not going to get into the mechanics here of what has happened. But this big decline here in the estimated earnings that came on fairly suddenly, well, that has led to this price drop very much as a reaction, as many investors began to question their long-term holding in this stock. And I can completely understand that. Now, look, this is an SP A credit-rated company. It's got a very manageable long-term debt to capital. It does pay a dividend. Now, it's important to note here that the dividend is only sort of 1.6%, although that we can see that the dividend growth rate is reasonable year on year, and it does have a good history for increasing the dividends. So what are we looking at then in terms of the long-term opportunities for this company and for this holding? Well, one of the things I like to do is I like to switch this to a normal multiple, and we can see over historically it's traded at about 14 to sort of 16 times on a normal multiple. Now, if I take a very sort of conservative, I think the lowest value here is a sort of a 13.1 multiple, and adjusts this blue line here accordingly. So if we expected the company to return to a 13 times price to earnings multiple, which would actually represent a small expansion from where it is today at about a 12.2 times, if nothing else changes, if the estimates for the earnings per share at $40 a share at the end of 2026 are consistent, and the price is returned to this level of 13.1 times on a price to earnings ratio, we could be looking at total annualized returns of about 15%, which isn't huge. But remember, I am not here to try and jump on a massive, fast growing company or asset class. I am here to cash slow growing checks from long term, multi year, multi-decade dividend stock holdings. Now, this is a company that is well managed, and if I switch back to the overall historical trend, we can see that the earnings for the company has just basically continued to grow year on year, with this slight dip here in 2024 now expected as a very, very slight blip on the radar. And in long term, we expect those earnings to just keep on growing. And we can see estimated earnings growth here, 2025 of 5% and 2026 of 15%. So this is a holding for me that I'm not looking at for 1 or 2 years. Instead, I want to hold this company and look for these years with these double-digit EPS growths that we've sort of seen in the past. Now, if we switch also to the forecasting tab here, this is one of the reasons that I absolutely love Fast Graphs as a platform. It's also got this long-term growth tab here. Now, bearing in mind, this is two analysts providing these long-term growth expectations, and the average is about 8.8% long-term growth per year. Now, that's usually over a sort of a 5-year period that they estimate for, depending on the service and the employer. Now, if we look at this long term, then we've got some fabulous opportunities here from this current point. Now, this orange line is at 15 times. And again, we might not be looking at that. We might be only looking at sort of 13 or even 12 times. And if we project it out here, this is, even at a 12 times price to earnings multiple in the future with 8.8% growth per year expected in the underlying earnings, we're looking at a total annualized rate of return that is very happily into the double digits. Now, that comprises primarily the capital appreciation as the stock price fluctuates and sort of follows that orange line upwards, but it also includes a small chunk here of the dividends, and the dividends are generally going to increase year on, year out. And now you can also ask me, hey, look, Lincoln, why do you have any confidence in this value? Why do you have confidence in the fact that this company is probably going to do well? And this comes down to the historical analyst scorecard here calculated by FastGraphs. And essentially, in a 1-year period, most of the time they hit the analyst expectations for earnings. And 2 years out, also they tend to hit it. And some of the time they beat the analyst expectations for earnings. So analysts usually get it right. This is a company where analysts are usually able to easily predict what's going to happen. Now, as a result, this isn't a perfect company, and obviously anytime price declines like this, we have to do a bit more research. This is not a deep research dive, but this is a company I've had my eye on for a long time, and recently, since this big drop in prices, I've been starting a small position in this stock. So let me know, is Elevance on your radar? And if not, why not? What's going on here that might make you a little bit queasy or a little bit uncertain about this stock? And what would it take for you to take a position? Let me know in the comments down below.